every year we put our outlook. At the same time for the year, we put our Grey Swan outlier scenario. I mean, these are low probability events that have the potential to shape markets in a meaningful way. We gather as a group, we debate which ones we think are the most likely of these least likely events. And the first one is definitely that AI fails to scale. And this is less about investors getting nervous about AI and more about AI just running into hard constraints as it tries to grow. And the ways that we can envision this happening are, chip shortages, power grid limits, and or regulatory backlash. And in the worst case scenario, they converge to create a perfect storm. You take grid capacity, for instance. Training and deploying advanced AI models, as we know, consumes staggering amounts of energy. If demand spikes beyond grid capacity, the consequences would be severe. And we could actually see, if we get a big demand spike, some pretty significant political backlash and environmental scrutiny. I mean, we've seen a little bit of focus already, for instance, in Virginia, where Loudoun County has the world's highest concentration of data centers. Data centers today already account for over 20% of sales, and demand is only forecast to grow rapidly. It could actually double the total energy demand within that county by 2040. And you're seeing signs of public resistance surfacing, and that does present a potential obstacle to AI growth.
There's so many things I wanted to pick up on regarding the Grey Swans, and it's such a fascinating report. One of the key ones, the key Grey Swans that you're highlighting, a key issue on the list here, is stress in the sovereign bond markets. So unpack that for me, and what's the risk of a sovereign bond shock this year? Where would it come from, and what might it look like?
Yeah, I mean, the amount of fiscal debt, rising debt, heavier bond supplies. I mean, this has been something that we've been watching, monitoring for several years now, and it actually looked like last year. Last year, we were expecting investors to start getting a little bit nervous, and they didn't. And we do believe that a Grey Swan is that we finally get a buyer's strike in developed sovereign markets. Again, investors have been curiously accommodative, and the notorious bond vigilantes have been relatively well behaved to date. And while our base case doesn't really anticipate a huge change in that behavior, we could see the first episode of serious stress this year. And how does that happen? Well, France appears, we think, the most likely candidate for a bond shock. As high deficits are not only mixed with low growth, but are complemented by this sort of low-level political crisis that has the ability to flare up at times. And you've got a year of political gridlock ahead with a fraud election campaign that opens doors to big swings in sentiment, and you could get a sudden buyer's strike for French government debt. That wouldn't be a local story. That would put pressure on most of the other European and developed sovereign bonds as well.
Another is a potential spike in energy prices, really key for our region. In a market already on edge, what would you say would be the catalyst for 100 USD oil if it were to eventuate?
Yeah, well, we think, oil prices have been pretty weak, right? They declined 18% last year. That was their steepest decline in 5 years. Oil's now pricing around $65 a barrel. And, the outlook is actually pretty modest on a combination of both pretty, relatively weak demand and spare capacity. But we think the Grey Swan is that oil actually sees a pretty big increase. Oil prices always have the ability to surprise us. And we think the most likely catalyst to this would be a geopolitically driven disruption in the supply, possibly a rerouting of global oil flows, either in the Middle East, South America, or other recent hotspots. There also could be a material shift in India and Chinese demand for petroleum products. And another possibility is that increased AI power consumption could contribute to an oil price squeeze as we sort of get that greater use with, the need for more peak and backup generation.
Let's talk about what's happening internationally as well. Of course, on the wall, another key Grey Swan risk is called China goes shopping. Of course, China, one of the world's largest consumers of crude oil, but also a significant holder of U.S. treasuries as well. So unpack that for me. What do you mean? Shopping spree. What's the risk?
Yeah, this is our fun one. And this is our positive outlook, a very positive Grey Swan. So they don't all have to be negative, right? So this one is, really around the fact that Beijing leadership in China realizes that the path to sustainable growth and to restoring international goodwill lies in empowering Chinese consumers. Um, in this gray swan, we see policymakers unleashing a bold, demand-driven pivot. They let the renminbi strengthen. They unleash a huge demand-side stimulus. The government could roll out. They could roll out supported property laws. They could expand social welfare. They could incentivize household spending. Think trade-in programs, tax cuts, direct transfers, and then they could manage the renminbi to let it appreciate naturally, which would then boost purchasing power, cheapening imports, and spurring consumption. We think this could be profound if the leadership allows this to happen, and this would boost both traditional industries in China as well as new sectors, including the AI and renewable sectors that have done so well. This would also attract foreign inflows into equities and bonds into China. It would lift sentiment broadly across Asia. There would be knock-on effects to China's neighbors. It would support regional currencies and then underpin broadening commodity demand. So this is a very favorable gray swan and one we would actually like to see happen.